Everybody, good to be back here with you for swing trading. My name is Mike Fairborn. I've had a couple of great coaches step in for the last couple of weeks as I was actually had one day off and I was out sick last week with a real doozy. Got the whole family sick, even my dog, which is interesting. My dog got sick as well. Dogs can get sick with humans' colds, as I found out, but it is good to be back. And I'm still not 100%, but I'm darn close. So good to be with you, folks. I'm joined in the chat by a good friend, colleague of mine, Barb Armstrong. It's a pleasure to have her here. I've been filling in for her the last little bit. She's been filling in for me, mainly on chats. Great to have you there, Barb, as always. And folks, great to see you here. Hello to you, Riceberg. We've got Chuck, Ocean Life, Scott, Beth, Will, David. Good afternoon to all of you. We're going to be looking at quite a few different setups today, at least four swing trade type setups. And I want to pay special attention today to the trend and really discuss that trend in the context of a moving average. And oftentimes when we see a moving average like this occur, a moving average crossover, that is, it's an indication that the trend might have also started to go up as well. So we're going to link that in. It's surprising how many times you'll see that with these swing trades. And so look forward to talking to you about that. But first off, let's see some disclosures to get going here. Now, the information here is for general information purposes only and should not be considered an individualized recommendation or endorsement of any particular security, chart pattern, or investment strategy. Options carry a high level of risk. They're not suitable for all investors. With that, too, some additional notes. Spread trading must be done in a margin account. Multiple leg option strategies will involve multiple transaction costs, and short options can be assigned at any time up to expiration, regardless of the in-the-money amount. An ITM option does have a higher risk of being assigned early as well. Now, short puts do risk purchasing the underlying stock at the strike price when the market price of the stock will likely be lower. The paper money software application is for education purposes only. Investing does involve risk, including loss of principal, and past performance is no guarantee of future results. So having said that, that is all we have for our disclosures. So what I want to do is just do a quick little dive into our markets here. And I want to show you a couple of details. And I wanted to get you guys thinking about just a couple of different areas that happen to be on my mind quite a bit as of late. And that is, what we've seen with the markets here, and we do have a shorter term bounce in the general market that we want to be mindful of as it could relate to some swing trades. This was a resistance level right here. We touched it initially. We came back down. We're breaking above it right here, right now. Now, as we consider the markets and maybe a little bit of resistance just above here, what has really been down? What's been taking the biggest hit? As we look broadly speaking now at the markets across all sectors here, what's really taken a big hit, just percentage-wise and performance-wise, communication services as well as infotech. And what we're going to get in there, are those big technology stocks, and that's a good look at that. But I will say this: when you get signs of the market recovering, it's oftentimes the tech group. The NASDAQ, a lot of times the NASDAQ 100 that we look at, the NDX, which may be first out of the gates, right? A lot of times it can be a little bit stronger. And notice what we're getting over here. Just a little bit of an inching higher within this group. Yeah, it too is making some highs in here. Oftentimes it can spring because they can be growth type stocks that do respond well with the economy. But I want you to think about tariffs here for just a moment. Think about the condition we're in the tariff environment, okay? What happens, do you guys think, if within the news flow, we start to get positive indications of additional countries signing tariffs that do not only get more uncertainty out of the way, but they might sign up for better terms for the U.S. I mean, that's the purpose in the first place, is to get really a level playing field, right? What would happen if all of these countries are being signed, a number of countries are being signed up, and then all of a sudden China feels pressured to sign something as well, or other countries? Is that going to be a positive effect or a negative effect? I'm thinking about it. I think it could be positive. And so we need to be kind of careful with what could happen. Let's just say NDX. Let's just go back to it. look at our markets here. We'll go NDX and look at the NASDAQ. Just keep this in mind. There could be a bounce. Now, it might come after a little bit of consolidation or whatever, but I think news is really driving a lot of the price performance in the market. It could be going forward. I think it's safe to say President Trump would have on his agenda some positive announcements, hopefully, to make in that regard. That's what they're shooting for. We'll see what does actually unfold, but we could start to see some of the NASDAQ type stocks, the technology companies, reverse. And that's just something I wanted to park on your individual radars here. That's it. That's all I've got to say here. You got some of these Apple kind of breaking through a trend line here a little bit too. All right. Well, with that, I want to get into a group that has been doing actually a little bit better than average, and that's going to be some of the non-discretionary groups. Kroger is one. What I've done over here for us is just counted some of the bars that fit really within our swing trade time frame in terms of the bounce recovery. You've got 10 bars, you got 4 over here. Notice the swing up off of the flags. You got 9, then another 9 over here. We've talked about swing trades really being between 3 and 10 days, and this I think does kind of show us a lot of what that setup, that scenario could look like in terms of that follow through that we're just seeing on the chart. And a lot of times you can just come through here and just count the number of bars. You can see how even in the prior move outside of 2025, this is the year going forward here, 2025, we've been holding pretty well within that time frame, 3 to 10 days. Okay, but that is the move we're looking for on the swing trade. Really kind of the big moves in the market. And then once those are hit, targets, we've talked about targets previously, we'll do that again. Yeah, within that time frame is what we're really focused in on. Now, what I've done today is I wanted to focus in on initially a moving average that is really actually quite interesting. I'm going to go ahead and go to my style. I've saved it as a style. It's just the 521 crossover, and there it is right now. I'll keep it on Kroger here. We can keep our other lines in place. I'm going to pull these down for just a second so you can see that crossover. The 5 and the, excuse me, that's a 10. I apologize. Let me go ahead. I did have a 10 in there. I was looking at a 5 as well. A lot of times it is the 10 and the 20, a 2-week and a 1-month time frame. I wanted to show you the 5. I mislabeled that, didn't I? The 5 and the 21. 5 is very similar, but there you have it right now. There's your 5 and there's your 21. And now what I'm going to do is resave this as a style. 521, get that right. Okay. The point here is that we're looking at the 5 period. What does that constitute? It's 5 bars. And we know in the market a full week is equivalent to 1 bar. So let's get these numbers down here first. So we've got a 1-week time frame that we're looking at. Right? 1 week. And our longer time frame is going to be a 21. So the 21 is going to be a 1-month time frame. These have been used previously, and they are interesting in the sense that you are trying to get a sense of, hey, that timing of a week's time frame, how is that setting up relative to what prices on average have been doing over the prior month? Does the 1 week start to exceed the 1-month time frame? A lot of times on the consolidations, they might last more than 3 to 10 days. Maybe those are closer to a month, but the breakouts are maybe closer to a week or two. And this can be interesting. Now, what I want to have you recognize here on the charts is that when you get the early indication of this break right here, a lot of times the entire trend might be shifting up. Okay, and these very small sized pullbacks, these little flags, are still holding within that moving average. In other words, you've got the 5 that is greater than the 21. The 1 week is exceeding the month time frame, and it's another indication of additional strength in the trend. I wanted that to be a reference here because I think, once you get this crossover, the trend may have already started. So keeping eyes on that trend can be very, very helpful. That crossover for the trend. Okay, so let's look at this. I've got a few to look at, but that's going to be a general theme I wanted to look at because it's a good, cool little reference to have. Again, if you have it on the chart, I've just gone in and added these two. They are exponential moving averages, so they do take more consideration into the latter end of the 5 period or the 21. 5 is pretty short, but for the last 21 days, the the more recent end of those 21 days will have more of an impact on these moving averages. But if you set these up, and by the way, you're going to find these over here, not under moving average. You got to go EXP, exponential. Or, that's a good way to find it. You can still find it under moving averages. There are quite a few, but if you do moving average exponential right here, I just always go EXP, and I've got it in. What I'm going to do is just go into the study up top and just save that 5 and 10 crossover, and then you can put it on any chart very quickly for you. Okay, so what do you see over here? Here is a bit of a pullback, and in this class, we do talk a lot about the flag patterns that are representative of strong upward moves and a consolidation coming down. Now, what you can see right here is we happen to be, bouncing. It's the first real green day that we've seen in here. We haven't quite made a K-hold yet. We're close to it, as you can see right here. A little bit close to it, but you can see there's a little bit of an area where we've bounced, and I don't know if you guys have been in some of my other classes that I've talked about. I think many of you have, but if you come down and you bounce off of this lower moving average, a monthly moving average can be interesting this way. I've seen it happen off the 30-day period quite a bit too. When prices on a flag pullback, sometimes they do bounce when they hit the moving average. Just something as a side note to keep an eye on. We might be getting that right now. Let's go ahead and take a look at what the trade would look like here on a setup in this regard, and what some of the maybe potential targets, potential exits would look like as well. Initially, we might be looking at a T1 target up to the prior high, right? And this was met across the board with each of these on the pullback. That was a T1 that was hit off of this prior high, so that bounce hit. You can see over here, this bounce hit, and so too did this bounce as well. It was a little bit deep, but we made it back up to the T1 level. All right, you can see us come up to that level, so the T1 puts us right at that point, just below 74. You want to get the number right so that we can set our potential target up here if we are looking at a T1. I'm going to go ahead and just line this up right now. Let's see, so the high here, you can see, is at 73.63. So right near that point. And in terms of a potential exit to the downside, a couple that we have looked at previously, but the one that we oftentimes will say is that if the price of the stock, as it's bouncing up higher here, a lot of times what we can say, a shorter term stop would be, maybe closing or trading below the low of today's low. We're kind of a little bit possibly late in this bounce, but we've got a little bit more confirmation. Prices are up a little bit, but there's a little bit of a distance. So the exit would be from here to here, approximately, right? Potential exit level. And then your target would be up at this range. You can see it's slightly higher, so the reward is maybe a slight bit bigger if we're getting in here than our risk. And you'll find this oftentimes with that T1 target. It's going to be totally different if we look at the T2 target. The T2, we take the full length of the flag pattern. And what I've done with this, and what we'll generally do, is we'll come right down here in the bottom right-hand corner of the screen. We're going to click on this little icon. I'm going to take us over to this Fibonacci here off to the right-hand side, which gives us the actual extensions. I'm going to take us to this last low right here before we really started to get moving on this trend. Pull it up to the high, and then pull it down to the end of the potential flag pattern, and there is your full target range, just above 77.50, about 77.82. Okay, so we kind of need to decide, what are we going to do in terms of this move to the upside right here? Are we going to take a T2 target? It's just an individual determination, T2 or a T1, a full length of the flag or not. A lot of times for the T2, what traders are looking for is just generally kind of a follow through in price action. It's day after day after day of some good price movement. Maybe a day of a pullback here and there, but generally a strong upward move. Okay. In other words, you're seeing some consistency of the trend. The trend is making progress, because a lot of times when these flag patterns work out, It's very quick and very straightforward. It might go down for a day and then right back up again. So that could be a longer term indication. What you don't want to see is if you're looking maybe closer to a T1 target, is maybe price action that just kind of meanders around a little bit. It just takes its time. Notice the slope of that trend. The slope of that line is very, very weak, and it tends to just drag, and it could easily find resistance around these levels. That's on the upside there, right? If that were to occur. So a couple of just quick notes. I like to kind of go through some of the details of what we look at on the swing trade specifically. As we take a look at this, and it's kind of funny because you could say there is a Fibonacci number tied in here, but it is just a 100% of the Fibonacci. It's the full range we're looking for on that T2. But yeah, those are some of the Fibonacci numbers that are showing up there as well. Okay, now in terms of the downside, as we looked at this, what we'll do is we could look at maybe an exit below that level. And I'm going to just show you how I'm going to use maybe a 70 and then a 70 to 50, and then we can make some adjustments to whatever we want to look at on the chart. Okay. Additionally, what we've talked about is using an ATR as a potential exit as well, especially right when we're getting into the trend. Here is an average true range. This is just simply, yet another indicator here at the bottom, but that average true range, 14 bars. A lot of times we're using 1 to 1/2 of that ATR range. Okay, right now we're at about 180 at 190, I guess, so about 80 cents. So we could look at an 80 cents over here. Let's take a look at that. We kind of leave this open because there are a few different ways to do it, but we'll definitely select one here as we go through this. Okay, let me keep the ATR on. I'll take this RSI off for now. Another quick note too. Look at the volume. Volume really getting light on the pullback. You like to see that. You'd actually like to see volume strengthen here too. A lot of times you don't see it on the very first day of the bounce, but if prices are going to go higher, we probably want to see a recovery in that volume. That just stuck out to me. As you can see it coming down, a positive there, but also you want to see it reverse as prices do go higher if that does unfold. Okay, so that's what we've got. Let's take a look at the trade over here, and we'll set this up. In fact, I'll just go over here onto the ask side, and we will go into buy custom with an OCO bracket. We could just start this off with a 100 for now on this. I'm going to go ahead and just leave it as it stands as a dollar within, and I'm going to adjust these right on the chart itself. I think it's a really easy way to do this. As you can see, I'm going to go good till cancel on each of these. We can do good till cancel just on the two potential targets to the upside, and here is one to the downside on our stop. Now, all it simply does is put a dollar above and a dollar below from our potential entry point here. I'm going to go ahead and lift this off so we can get that trade under our belt, put that in as a market order. For 100 shares, everything lines up. There is a good look at our confirmation dialog box, as you can see right there. Buying one. There is our exit 1, exit 2. We'll put this on, get that trade under our belt right now. So we can map this out in our account into next week. Okay, so here is our potential target and our stop. So what I'm looking at, and as you can see right here, we have had a tendency to reach near or nearer to, or I could say above the T1 target. This actually looks a little bit like one of the stronger flag patterns up, the pole of the flag, a very mild pullback if this does follow through. What some traders might do is just lift this up to the T1 target initially, which is above that 71, excuse me, I'll pull this back down again, 77.50 level. I'm going to line these up again so you can just see it a little bit better. I'm going to put the stop below this low right there. Okay, or just below that low. We're very, very close to it. There we have it. Okay, let's see. Let me move this again. Boom, right there. Okay. Is our potential exit there. I'm going to go ahead and just line these fibs up one more time so you can see where we're at. Off the bottom, top, and here we go again. I got close to the 100. That's close. All right, so 877.88, but right in that range. You can see that we're right at the bottom in terms of our potential target there. I am doing a T2 on this one. Again, we could look at a T1, but there we have it. So a pretty good tendency, right? Historical tendency for prices to go up. We'll see if that does unfold here. Now, one of the things we noted too is if we take out this high, we might start to use we take out the high here or we reach the T1, we might adjust our potential exit to something like an ATR at that point in time. And the reason is because sometimes if it drags here, it could bounce as resistance. It is a prior high. We want to be able to capture gains or potential gains or reduce, potential a potential pullback by using something like a moving average as an exit. We could look at a 22, which has been holding up pretty well. Okay, excuse me, the 21. We've talked about a 10-period moving average, and we could also use an ATR as opposed to our initial entry point. So let me just make that really, really clear again. Past the T1 target, if we even hit the T1, it is, by definition, resistance. Do we want to wait for prices to drop all the way down here? We don't in this class. We don't wait for it to go all the way back down to our initial stop level. In other words, we try to use something that's moving up with prices so that it can hold with that upward trend. Okay. All right. That is under our belt right now. Now, I want to do a comparison today with an option as well. Remember on the options are a little bit different. If we were to do a long option here, we could be looking out for the long option coming out. Well, if we're looking at 3 to 10 days, we want to at least go out double the longest time frame. So it's basically out a 20-day time frame in terms of calendar days into the future. So we're looking over here, something maybe like a June or towards the end of May monthly contract. We're going to do kind of a side-by-side comparison and kind of review this each week. So let's do this over here. We've got a 17, which is a little bit short. It's not quite 20. And we've got a weekly. Now what I want to do is come over here and look at putting on a long call, just a single call option here by comparison. Okay, and we'll do an OCO bracket order on it as well. Now this is a paper money account, so I can get away with it. Normally, a trader isn't doing both. If you're doing this in paper money, you might just want to do one or the other. We're going to be doing both in each case. I want to talk about a few of these scenarios here as we look at this. Okay, so first of all, what does the liquidity look like since we're on the option side? You can see clearly the liquidity, it's a lot stronger over here in terms of the open interest, right? And sometimes these weekly options are fairly new. They might have just come up this last week. Sometimes those are updated, but these are not even in the, they're not to the 100 range yet. And over here, we're into the tens of thousands of range right here in the 12,000. The spreads are still about pretty good. This is pretty tight in terms of, the time decay. But on a trade like this that's bouncing, there might be the expectation that we're just going to break up and keep running higher very quickly, like we talked about. That could be a scenario. So let's look at this right now. Let's just look at these. I'd like to set these up too, generally with 10 strikes, so I can see both on the same screen, especially if we're looking something near the money. What traders will look for too is they might be looking at a delta that is between 60 and 70. And again, the delta is just a reference to a $1 increase in the underlying stock. So for every $1 that the price of the stock goes up, the option should move up by the amount of the delta. Let me just highlight these two. Here's the 66 right there. And it does tend to have like pretty good open interest, but that range should move for every $1 move in the underlying stock. The option itself, I'm talking about the option, this range here should move approximately 66 cents. And that number will keep increasing as we go higher. That's referred to as the gamma. For each additional dollar, there is the gamma that can influence the delta. Okay, I'm going to go ahead and stick with this one for now. I know there's a lot of, there's only 17 days left, but we're still within that time frame. We're kind of anticipating that that move will occur up. We'll see what that happens. I mean, that might be somebody's expectation. So let's do this. Let's go over here and get it rolling. I'm going to right click on the 70 even, which gives us that 66 delta. And it's got a lot of volume today too. We might not be the only ones looking at this. I'm going to right click. We'll do a buy custom order with an OCO bracket. And I've got, there are some strategies that can be put in place for the target as well as the stop. I'm going to do, actually, instead of the target. Now, I thought about this previously. I'm going to add a stop in first because a target could be added, but there's a lot going on behind the scenes with the option Greeks that are influencing this price, okay? And it's really tricky to know where the price of the stock is at, but we can get some ideas with alerts, and there's some other little cool tools we can use too. But what I'm going to do right now is an approach that some traders will use is they might say, in terms of a potential exit on this option, they might just take half of the trade. And so in other words, we're going to do $2.36 is what we're paying for, we believe. Well, we'll keep that on. Yeah, $2.36. We're going to divide this by 2. So we're willing to lose half. In other words, we're okay losing 118 if we can buy it at 236. Okay, now one of the keys, and let me go ahead and put a good till cancel in, but one of the key points to this is if the price of the stock were to do one of these, just go sideways for a little bit, what is it that's going to eat us alive over here? Well, something we love when we're selling options and something we really need to be mindful of when we're buying options is the theta, the time decay, which does occur 7 days a week. That's weekends, right? If you're going slow, and if you're just going sideways here, maybe you're not even doing anything, but that helps to ensure that you get out if you're losing at least half the trade too, because we're dealing with 17 days, something we need to be kind of careful with, clearly, okay? So that is what I'm setting up for now, just on a single contract. I wanted to kind of highlight both of these, so let's do it. Let's confirm what we've got. There is our setup. And I'm going to go ahead and click on send right now. All right. So with this, click. We're going to come back to our charts. I have another stop that's just going to be sitting there. And how do we distinguish between the two? Right there. It's just a -1 as opposed to the -100. Right now, that one's going to be in place because that's set, again, with a 50% of the option. Okay. A little delay there on my drawing. Okay, there we go. Okay, but what I'm going to do in place of this initially is I want to do a right click here and I want to see what the option price is, however long it might take to get there. If in fact it does unfold, I'm going to right click and create an alert in here. This is going to help me notify me too, not only for my stock trade, but also for my option trade. I'm going to say, okay, at resistance. Question mark. It is resistance, but will it hold? That's the question mark. So I put an alert in there so I can get text or emailed. I don't know about you guys. If you've been to some of my classes, I do use this quite a bit. All right. Now, while we're at it, folks, if you're not following Barb and I on X, encourage you to do so. Barb Armstrong, remember, it's CS at the end. Barb has a number of stragglers that like to track her Twitter handler. I noticed I had 5 as I looked over the last few days myself. Imposters is what they're also called. I call them stragglers, imposters. But anyhow, that's how you'll know, is Barb Armstrong CS. No spaces. She's already posted that previously up top. And then Mike Fairborn CS as well. They are creative in how they are imposters there, but love to have you guys follow us if, in fact, you're on board. All right. All right, if you find this effective, helpful, folks, smash that like button. Also, love to have you subscribe. Bottom right, you go on the screen. Real easy to do. All right, well, those are the 2 trades we're going to be looking at on Kroger and seeing how this unfolds. Now remember, these non-discretionaries are really quite interesting right now because we're seeing a lot of trends. Let's go into the next one right now. Spent a lot of time on that. We'll go through these a little bit quicker. Here's Dollar Tree. Okay, we had the crossover right here. Boom, right there. That's our 521. Notice, can be an early indication of the change in trend. We dip down here. There is the 5 becoming greater than, not less than, greater than the 21 using EMAs. They are faster, but it can give us an indication that it's already moved. And it's a lot of times when they come back and they come close together, it could be interesting. But that happened. And now we take a look at the chart itself. If I really zoom in on that, you can take a look and see what we've been able to do with Dollar Tree. Now, the funny thing with Dollar Tree is it seems to be fundamentally a little bit stronger in some of the fundamental ratios, etc., than that Dollar General. And there was, I think it was trying to purchase that Dollar General for a long time. They couldn't get it to work out. I think they finally got rid of it or spun it off or something like that. You'll have to get the actual details on it. But it might be better positioned to start moving now. Again, consumer type discretionary, right? Could it hold up better under tariffs? Think about it. Kroger, food company, right? Dollar Tree, they do have some food. They have other stuff as well, but maybe if people are getting pinched, or they may be getting pinched on tariffs, it's cheaper. And so it might be okay there. You could say for Kroger with the food, I think a lot of the food probably doesn't come from China. A lot of the food that we have here, a lot of great manufacturing companies in the US in terms of food, right? And so, but they're also like necessary items as well. You got to have food, yeah. And so we have a few things that might be bolstering this group. And like, again, we're seeing it here with Dollar Tree. Notice the flag over here. There's a longer term support potential support that I've shown, but look at this. We come up here, boom, we dip down, and that volume just dips. Now the volume wasn't great over here, but it was great enough to take out that high, and we seem to be holding okay. Look at the money flow too. Our reference that we love to look at with volume. Wow, if you're looking at volume that's being added week in and week out, cumulatively, that money flow is really actually quite strong. In fact, look where that money flow hit, everybody. That last high right here is going to be our comparison. I'll always point this out when I can see it. We just don't get it as frequently as I'd love to see it. But that high right there, pretty good money flow, according to what the money flow is telling us, netting out buying versus selling. Now, what we do is we draw a line right from that top, take it all the way over here. Oh, cool, I made a straight line. It's not always straight, just like that, see? But the general idea is as I correct over here, that level right there is the equivalent money flow, real close to a 105 level in price. And people that trade money flow, they'll say, hey, prices, we should be able to get up to this level. That's the question. But we should be able to get up there because we have enough buying pressure already, accumulation. It looks like somebody's been accumulating this. And a lot of times to move this, it is what they refer to as smart money. It can't be institutions. So let's just see what happens. But what does this do for our trade in terms of the flag? Well, maybe we can flag up higher here. There's 100. That's kind of a big number. Could be interesting. I'm going to put some lines on here so we can kind of get a sense of our targets and get another trade under our belt pretty quickly. Okay, this is actually the bottom, and that's the top of the flagpole. And I'm going to pull it down here if, in fact, that's the bottom. And you can see there is that's a T2 target, right? It's the full length of the flagpole. The pole itself, if I zoom in, we would get very, very little on a T1. It's actually right to that 23.6, 23.6 fib. I don't use the 23.6 too much, but maybe some traders do. But that puts us about 103. I'm going to leave these on here so we can get our targets in place. Let's go to our trade tab right now. I'm going to right click and we'll go buy custom with an OCO bracket order. We'll keep that we'll keep that open as a market. I'm going to go ahead and put these as good till cancel. I'm going to put the trade on again and we'll adjust it, okay, to each of those levels. All right. Let's go ahead and click on, oh, not send yet. Let's take a look at our dialog box. Just the buying power effect. Got other details. Good. There is our order. We've got to adjust those. I'm going to adjust these on the chart. I'm going to zoom in since those lines are a little bit tight. Ooh, that stop lined up pretty well. Now, I am going to put this stop just below that low. We've had a tendency to kind of hold into that range. That's a much tighter sort of potential exit level if, in fact, we dip down to that point. As a matter of fact, we are, how far down are we from there? Let me get my diagonal tool to point it out. We are about a $1.30, $1.40 or so, $1.40-ish from that point of entry to our exit. Now, the upside, I've got to pull this up and pull it up again. Yeah, I'm going to zoom out. We'll do that. Pull it down and pull this up to our 100. You see how helpful that is if you have the fibs on already? And then just put it up. I didn't do that way the first time, but there you have it, near 100 for a full target range. Okay, now when you guys look at this, do you think that this might require some flexibility on our end to get up that high? If we were really thinking about a move going up that high. Think about the moving averages. How much flexibility do you want to give it? And I'm saying like a moving average coming on up here, or whatever the case might be, to help lock in gains if it goes down, but also be flexible enough to hit our target to the upside. Keep in mind there is that 100 level. Is it really that high? Yeah, I guess it was, yeah. That looks right. Okay, good. So that's the target range right there. All right. So what kind of a moving average? One thing we can do on that is we can go back and look historically. I know that a number of traders will do this. They'll say, for example, when prices are moving, when they anticipate, let's go right over here. I realize I'm looking in the past. Folks, the past is no guarantee of the future. It can sometimes rhyme, but I'm just trying to get a sense. What, Dollar Tree has been down for quite a bit with that Dollar General situation, right? But if we look over here, when we got coming out of a move, can you see that 20 period, the 21 EMA, prices were able to hold above that level pretty well. So they didn't really close below it in a run like this. So if that was a flag pattern, you were able to capture it easily. If this was a flag pattern right over here, let's zoom in. Let's just do that. I can see it really easy, but I don't know if you guys can. Here is our 521 crossover, right? Change potentially, trend potentially already changed. Okay, here's a flag pattern. Ooh, even the 5 period EMA held that really well. We actually did not close below the 5 over here. Very strong. I don't know if that's going to be too tight, but you can see the 21 gave us all kinds of flexibility to reach this level. Maybe that's a little bit loose, right? Between those two. But that is something we need to consider. What kind of a moving average are we going to look at if, it's a good problem to have, but to lock in that gain? So more on that next week as we see what kind of a move occurs. Hopefully we're still in that trade. All right, next one up. Costco, let's see, CCEP. This is interesting. This is actually Coca-Cola Euro Pacific, and some of the companies in Europe have actually been quite strong. I'm going to go back to a 1-year chart, actually 6 months. Let's take a look at this. You can see us break above the range. See where that flag pattern might be coming up right through here. See the flag right over here? Flag up, sitting there. We got our crossover. The longer term trend has been up too. That is that's a higher low, potentially a higher low here as well. What are we doing? We're touching right off the 21 moving average, maybe ready to bounce here as well. This is kind of interesting because we are, we're getting the Euro Pacific Coca-Cola involved. And one more line, prior high right there. Could we hold it this time? I will say there's something really quite different from this last move up. Notice how we shot up here. It looked like we might be ready to move. How many days did we hold that for? That would be a grand total of 1 day. And then we just got slammed. And then we came up here, and now look at us hold. Pretty good. We're flattening out at support with weaker volume on a bounce day. Now, putting a potential exit below this range could be an interesting area. Again, we're using the chart to kind of help us guide us along those lines. Let's put the Fibonacci on here, and we'll get that other trade under our belt, and we'll look at the last one here right after. So there is a Fibonacci exponential. I'm going to take it right off the bottom to the top. Looks like a flag right there. And where is our 100? Thus far, we're all at T2 targets today. 97.6. Okay, let's get into the trade tab and put it on. Buy custom, OCL bracket. Go ahead and just make that a market just to get it going. And good till cancel, good till cancel. Confirm and send. Okay, confirming the dialog box. We'll go ahead and send this on through. We'll make some adjustments here on our chart. I'm going to zoom in to do that a little bit. Remember, we mentioned the stop. We're going to hold. Oh, I got to readjust this. Anytime that happens and you've adjusted the y-axis, folks, just click on this little icon here to get us back to auto, and then you can adjust these lower. So I'm just going to put us just below that range. We're seeing that bounce, and technically, right now, a close above the high to low day, but I can't say that yet because we still have 18 minutes left before the market closes, but it is interesting, and we've got our moving average crossover. Now, I'm going to pull this out all the way and reset it again and see if I can find my target up top. You might say it's a fairly aggressive target. Again, anytime with these targets, if you wanted to do a shorter term target, you can always pull this guy down to the T1, okay, to get that potential exit level for your target in place there. Okay, but there are 3 right there that we've done. Again, look at this. I mean, Coca-Cola, right? It's just one of those non-discretionary items, more in the staples group. We've done probably enough of these. But Costco, just to highlight Costco, I'll go a little bit longer on Costco right there. You can see Costco, it's coming up towards this resistance level. Sort of looks like a cup, head and shoulders. I've got one more just to show you. We don't have time to go through it. This is SO Southern, and it's kind of holding into a flag and showing strength as of late as well. All right. Well, that was something. We went through quite a few of those very, very quick. I hope you found something interesting in it and useful. Oh, thank you, Wiley. Yeah, folks, if you found this helpful, effective, really appreciate the like if you're able to do that. And subscribe for sure. There's a lot of great stuff that you get from our channel here, and we'd love to have you on board if you're not already, to get this content coming out for you more frequently. Again, you can follow Barb and I on X, Barb Armstrong CS, Mike Fairborn CS. Hope you found this useful and informative. We will have this in our accounts to look at next week as we go into this. Because I'm past my cold. It was a little while, but so those positions are out. We're going to start this new, but we did get it going with some three positions to look at. All right, everybody. We'll have a great rest of the day, and we'll catch you all next time. See y'all.